Thank you everybody for joining us today on our webinar. As I've said a few times, but I'll just repeat again, some housekeeping notes. We do have you muted upon entry and ask that you keep your line muted through the presentation. We'll be using the chat feature at the end of the presentation to initiate conversations. So if you can wait until Melissa gets to the end, Melissa and John, they'll be free to answer any questions then. With that said, I'm going to introduce John Longstreet and Melissa Bova to present our coronavirus update for the week.
Thank you very much, Hope, and welcome everyone to today's webinar. We appreciate you taking the time to check in with us. The vast majority of this session, as has been the custom, will be conducted by Melissa Bova, who's really leading the charge on legislative affairs for the state and with our federal partners. She's going to start today and talking about the CARES Act, and in particular the P3 or the Paycheck Protection Program, which is the SBA loan, which opened up on Friday. We've had a number of people that we've talked to, probably 15 or 20 over the weekend, some of which have had a very difficult time accessing the PPP program, and others have had a relatively easy time accessing the PPP program. In fact, one of our members put in his application on Friday afternoon and had an approval by Friday evening. And yet we hear from others who can't get to the website, their bankers don't have the information and things like that. So we're trying to help to ensure that you can get that done. We also spoke with our past chairman and the owner of Spallman Street Deli and Weiss Provisions in Pittsburgh over the weekend, Jeff Cohen, who worked through the process and had a few specific tips that he wanted to share that might help people get through it. I'm not 100% sure Jeff's been able to check in yet on the call today. I've got a text from him saying he's here. And let's see if we can get Jeff unmuted, if he's actually here and he can run through the tips. And if not, I'll tell you what our backup plan is. Jeff, are you there? Okay, well, the backup plan is going to be that we'll identify, he had 4 bullet points that he just wanted to run through that thought it would make it easier for you to prepare for and actually be able to get information and get applied for the PPP. Whether the PPP actually works for you is a whole other subject that Melissa's going to talk a bit about, and some of the work that's being done at the federal level to try to make it a little bit more appropriate for our industry. But our focus is also trying to help you get through the process in the first place. So I'm going to turn it over to Melissa and let her begin the update. And then I'll be back later, reserve my comments for the end. I do have a few things I want to discuss with you, but we'll do that at the end of the session today, just before the Q&A. So with that, Melissa, I'll turn it over to you.
Okay, thank you, John. And I know if anybody has trouble hearing me, let me know. I'm trying to call through my computer. If you hear barking, it means that my effort to get the dog on a leash and away from the window failed. So if you hear her barking, she's just as frustrated as we all are with our current life right now. Welcome to my weekly brain dump. And I'm going to go over once again kind of everything that we have learned in the last week. Yesterday morning, I was kind of feeling like I wouldn't have a lot to cover. And then over the course of the day, I think we got some more information that I think will be helpful to many of you that are on the call. So I'm going to work through all of that. And as I said, ask questions. If I spot a question as I'm going through that I can answer quickly, I will. Otherwise, I will get to them all at the end of the webinar. Eric, can we go to the next slide? Thank you. The P3, as John said, Jeff Cohen reached out to him regarding some tips, and we'll get those tips out to everybody if it would be helpful. But wanted to go over some of the things relating to the P3 regarding feedback that we've gotten from all of you, in addition to some updates that we have received as well. Generally, we have seen a clear split between the processing of the P3s, that the smaller banks, more of your community banks, are actually processing those applications than some of the larger banks. And it's just because the larger banks have really been overwhelmed. So I think overall, some of the approvals that happened over the weekend were from the smaller local banks because they have relationships with their customers. But we do expect everything to be approved. The general feeling is, and I will get to this at a point in COVID-3, is that we will not run out of money here. The government will fund this further if we hit that $349 billion cap. With that being said, you should be applying now if you're planning to utilize the P3. And I'll have a tip on that in a minute. But if you are thinking of using the P3, you should be applying for it now. Some questions that we've gotten answers to, not all of the answers, but we're working on it. Under the P3, you can include salaries up to $100,000. There were questions as to what is inclusive of $100,000. Does it include any benefits that they might have, any bonuses, any health insurance? And the Treasury has since come back and said it's $100,000 cash wages. So if you have an employee that might make $99,000, but with their health insurance, it's more than that, you can still include the $99,000. So it's the $100,000 is based on cash wages. Of course, you cannot submit for higher than the $100,000. Some other items that came out in terms of clarification is that the P3 will cover paid sick leave, but not paid sick leave that is utilized under the Families First Act. So if you have paid sick leave that your employees can use because they have strep throat, they suffer from migraines, that can be inclusive in your application for the P3. Now, if you have an employee that is using paid sick leave under Families First and you're being reimbursed for that, you can't, as we say, double dip in an effort to use Families First plus the P3. Some other items I wanted to cover. In terms of your application regarding the P3, anything that you might have paid, if you have a contractor you work with, you have sole proprietors that you work with, their pay is not included in your payroll application that you submit on behalf of the P3. So if you contract with somebody, you do not include that pay as part of your application. They are eligible, sole proprietors and contractors are eligible on their own to apply for a P3, but you cannot include them in your payroll calculation that you submit. We did get some further clarification, and I think I've gotten a number of questions relating to this, the taxes that are inclusive in terms of applying for it, and I'm going to read directly from the Treasury relating to this. Under the Act, payroll costs are calculated on a gross basis without regard to federal taxes imposed or withheld, such as the employees and employers' share of Federal Insurance Contributions Act, the FICA, and income tax is required to be withheld from employees. As a result, payroll costs are not reduced by taxes imposed on an employee and required to be withheld by the employer, but payroll costs do not include the employer's share of payroll tax. So you do not need to include your share of the payroll tax when you're applying for it. So there was questions of when you're including your taxes, are you including what's deducted from the employee's salary? Are you including what you would pay? You do not include what is being deducted from the employee's salary. Some other items that I just want to throw out there, and then we'll get kind of into the future of COVID. We have not gotten an answer, I think, on a really important question as it relates to the P3. And this was a question that we got last week that we're still desperately trying to get clarification on. And that is, if you get approved for the loan now, can you push back the use of the loan until May 5th? So can you push it back as far as possible to hit that last 8-week period up to June 30th? Treasury has not delineated whether upon the loan origination date you have to use it then, or if you can push it back. And this is a conversation that you actually need to have with your bank. So your loan might be approved, but you should also go to your bank and ask if they will hold the loan until May 5th for you to draw upon it at that time. So that is a conversation that you really should start having with your bank in terms of holding off on that money if you want to hold that money until that May 5th date. So that's something that you need to have those conversations. I know as you're getting approved, and that's kind of the rub right now. We want you to apply now. You need to apply now. So you're guaranteed the money and you're not kind of in a round two of funding, but we also want to ensure that you can wait to use that money until you actually need it. So as you are approved, please have that conversation with your bank and ask if they can hold the money until that May 5th or another date. May 5th is the latest you can use the P3 under the current law. And I'll get to that in a second as well. So that is kind of my general updates on the P3 specifically as part of the CARES Act. EIDL, some of you are applying for the EIDL. That's the disaster loan that goes through the SBA. That does not go through a bank. That goes directly through the SBA. I don't know that anybody has actually gotten their $10,000 yet from applying for the EIDL. That seems to be getting stalled because while they made the system so as a way that you can pull the $10,000 and still utilize the P3, I think a lot of people are doing that and they underestimated the draw on that $10,000. But I will say that there are some tax provisions that the holder of a P3 cannot use, but somebody who has an EIDL can. Employee retention tax credit, pushing back some of the Social Security taxes that are due until the end of this year. If you have an EIDL, you are eligible for both of those tax provisions under the CARES Act. Further to that, I know we've had a lot of questions because we've been speaking very specifically to the business provisions of the CARES Act, which is the P3 and the EIDL. There are billions of dollars, billions with a B, not trillions, that's the package in and of itself, that are available in terms of grants that will be going to states to be using as they see fit, that will be going to other entities within states to be used as they see fit. I know that some people were on a call with Senator Toomey a little while ago, and he mentioned that Pennsylvania will be receiving that money. We do not know how much Pennsylvania is going to be receiving yet. We're waiting for the Treasury to essentially dictate how much of the funds will be going out. And from there, it will be up to the governor to determine how it's being used. So there are other funding options, grant type provisions that will be floating out there. We just don't know if they're going to apply to us, something else, or going to healthcare entirely. So those are questions that we're still waiting on the answer for. Let me jump to what I know about unemployment, because we have gotten a few updates on unemployment. And I know on Friday of this week, I think at 9 a.m., we are going to deep dive into unemployment again. I know we have an unemployment webinar when all of this started. And now we will be having a webinar this Friday at 9 a.m. that will really deep dive into the CARES Act. But I'm going to give you some items that we have found out since all of this started. As you know, unemployment typically runs for 26 weeks. It has been expanded to 39 weeks within the CARES Act. The $600, and I'll touch upon that in 30 seconds or less, only runs until the end of July. And I know there are a lot of concerns from individuals that are saying, my employees are getting unemployment plus $600. They're going to make more money on unemployment than they would make if they came back to work. And we've heard that from many of you, but this does not last for the perpetuity of unemployment. That cuts off at the end of July, that extra $600. And I'll get into that in a second as well. The $600 has not come out yet. It will be backdated to this week. So if your employee filed for unemployment on Monday, if that's when they usually get their payout, when the payouts are done, they will be backdated for this week. So even if we don't get the funds from the feds for 2 weeks, there will be a catch up on the $600 a week. Further to that point, that $600 will be applied to anybody who is receiving even $1 worth of unemployment. And this was a question we had. Does it apply to those that are participating in the shared work program, which is for those of you that might not have let your employees go, but their hours have been reduced? The $600 is not being broken up depending on how much you receive in unemployment. $600 will flow to every person filing for unemployment as it relates to the COVID crisis. So that's something I know many of you who have employees that are still working, in which you are kind of worried, will they want to go on full unemployment to access the $600? They're going to access the $600 even on partial unemployment. Further, if taxes will continue to be deducted from unemployment, that 10% withholding, if your employees are doing that, that will also be deducted from the $600 from the federal government. So it is not tax-free money if your employees are deducting their taxes from their unemployment. The $600, our state hasn't figured it out quite yet. It will either be bundled with the payout. So let's say your employee gets $500 a week, they will get $1,100 all at once, or it will be a second deposit. It's up to the states to figure out how that will look, but it will run through the Department of Labor and Industry, through our state unemployment office, via how they're getting their direct deposits relating to their original unemployment. Further to that, self-employed, for my self-employed individuals, I would love to have every answer in the world. We do not have all of the answers yet. This portal has not opened up for self-employed individuals as it relates to unemployment. We're waiting for more guidance from the state for that. So as of right now, do not file a claim. I know last week I said you should anyway, and to be honest, I don't think it hurts, because I think that at least you started the process. But the state is saying if you are a self-employed individual, you should not be filing yet, because they haven't exactly determined how they're going to be doing that yet. Further to the point that I know many of you are concerned about, and we are working through this. This came up on a call that I had about an hour ago. Pennsylvania waived the 1-week waiting requirement, so your employees were eligible to file for unemployment on their first day of being unemployed. They waived the search for work requirement. So typically when somebody files, every 2 weeks goes in to put in for their unemployment, they have to prove that they have looked for work. That has been waived. What has not been waived is the fact that if you offer your employee the ability to come back to work and you say, the crisis is over, we are bringing employees back, and they decline to come back to work, they are technically not entitled to unemployment any longer. And our State Department of Labor has reiterated the fact that they will not allow people who just don't want to go back to work to not be able to. Now, we would like to streamline that process because, of course, there is a process that needs to go into place when you offer somebody work and they decline it. But that is going to be something that's going to be helpful when you need to bring employees back. If they decline to for a reason outside of COVID, they would no longer be eligible for unemployment. And we will be working through that with the State Department of Labor and Industry as well. I do have a question. If we do the math wrong on what the bank deems as our monthly payroll average, does this mean the bank will reject the loan entirely or just award a lower amount? They will not reject the loan entirely. They will probably adjust the amount. We haven't heard of any outright rejections, just because everybody knows that some of you applied for these loans before we even got our questions answered. For unemployment, what if a server is working the same hours but has had bring home income reduced due to reduced business tips? Are they eligible to file for unemployment? Yes, they are eligible to file for unemployment. The $600 is only taxed if your employee has elected to have taxes taken out of their unemployment. But like I said, this is from our State Department of Labor that just came out on Sunday. So we might get more clarifiers on that front. Let me talk a little bit about, I put it on at COVID-4. It could be COVID-4. I've heard COVID 3.5 and then COVID-4. I've heard CARES Act Part 2. But let me tell you where we see the future going with all of this. Two concerns I've heard from many of you that I believe will be addressed. One is, what if they run out of money? What if the $349 billion run out? both the House and Senate and the President have reaffirmed that they will not let the funds run out. And by unanimous consent, as early as next week, both the House and the Senate can authorize more funds to flow into that $349 billion. So their intent is to make sure every business that applies for the P3 is given access to the loan provisions within the P3. That's step one. And let's get to the bigger issue that I think all of you have thought about as you've started this process. And that bigger issue is the fact that May 5th is the latest you can use the loan. And I think we all recognize to a certain extent that if we're open May 5th, you will not be at 100% complement, and you probably won't be 100% complement by June 30th. And how will that be addressed? It would be egg on the face of Congress to basically say, we're going to give you 8 weeks of payroll, and then on June 30th, you have to send everybody back to unemployment. They cannot and will not let that happen. So we do anticipate a few discussions to be had as it relates to either adding more money to those of you who have applied for the 8 weeks, to expand it beyond that June 30th date, and also in terms of pushing back that June 30th date to allow for the funds to be used as they're originally supposed to be used, to actually pay your employees to work, as opposed to just pulling them off of unemployment and having them sit on the couch. Also, a part of COVID, and all of that will probably not be decided potentially until June. So you really need to operate as if you're applying for the EIDL, applying for the P3, we don't really expect a lot of sweeping additions or changes to the CARES Act within the next few weeks. We expect more funding for it, but we don't expect a lot of sweeping changes right away. So you should continue to operate under the constraints of the CARES Act, but know in the back of your head that Congress is very cognizant that there will need to be changes made to make it work. I'm gonna come back to some of these questions because some people are jumping ahead, and I want to get through everything I'm discussing right now. So that's federal. We'll jump back to questions when we get to the end. Eric, can we go to the next slide? Let's talk about state stuff. As of right now, non-essential businesses are required to remain closed until April 30th. The governor has restated again that that is still where he is on that. April 30th is our date. We are hearing word that the curve is flattening. We're also seeing that we're getting, 1,500 to 2,000 new cases every day. But there is talk of the curve flattening. But as of right now, that April 30th date is the April 30th date. Most recent order from the governor is urging all Pennsylvanians to wear face masks. That came out on Monday of this week, urging, not mandating, urging everybody to wear face masks. And to quote our Secretary of Health, Dr. Levine, your mask protects me, my mask protects you. And that's the intent, is to protect each other. By everybody wearing masks, then everybody is protected. We might see future requirements that essential workers have to wear masks, and that some states are looking at that. They don't need to be medical masks, they can be homemade masks, but we are hearing some guidance might be coming down relating to employees in essential businesses, which is, restaurants, hotels, anyone that's still operating would have to wear masks at all times. We do not know if this is going to be a mandate or if this is just going to be continued guidance for essential businesses. But I do want to put that out there. Some states are doing it. I would not be surprised if Pennsylvania feels like they need to go down that route, but currently it is not mandated. As I said, that could be a potential future order. We're also looking at, and I talked about it last week, I think it came out after the call, regarding a crackdown on short-term rentals in Pennsylvania. We worked closely, and again, we thank the governor's office for bringing us in for this discussion. We worked closely to help them craft provisions that would stop short-term rentals while still ensuring that essential businesses like hotels, motels, and inns can continue to operate. The provision right now allows, obviously, for travelers to stay at our businesses. We don't expect a further crackdown in terms of only, essential employees can stay at hotels, motels, or inns, but we are keeping an eye on that because we are seeing some more strict restrictions happening in other states. So that's something we're keeping an eye out as well. PLCB update. Those of you that have talked to me, I mean, I know I'm preaching to the choir. We have had some conversations with the governor's office and the LCB just about opening up the ability for licensees to get wine. Those conversations are ongoing. I was told on a call this week to give them until tomorrow to come up with a plan to try and get wine out to our licensees. I will say that there are some options out there for those of you that might be interested. If you can order 50 cases of wine, there is an option out there for that. They are currently testing the opportunity of getting 2 cases of wine at a time delivered via UPS. So that's something a few of you on this call I know are participating in that, just in an effort to get wine out there, while understanding that the broader issue is the fact that licensees need to get their special liquor orders, and you need to be able to access the product like you used to. We still have not made progress, and I know I said this on a call earlier, I'm gonna have a heyday when this is over in terms of this is what happens when you have a state-owned monopoly, because they have felt no pressure to open up wine to go to all licensees or allowing spirits to go for all licensees. So we're continuing to bang the drum on that. The LCB is bleeding money every day. I think there is a recognition that they need to do something, and we hope to have some outline, some plan of attack. As they said give us until tomorrow. We'll give them until Friday, and then we will follow up on that again. Legislative session. And I'm going to get to property tax. I think every 6 people have asked me about property tax. I'm going to get to it, I promise. The legislature was in session this week. If you are a nerd, well, it's my job to watch it, but we had lots of drama this week. And I will say, it is kind of fun. The Senate is actually using Zoom to do their session. And sometimes senators don't realize that their microphone is on, and then they say things that they probably wouldn't want the public and other senators to hear. And for those of us that are watching it, it's been kind of entertaining, but it really has been, as an aside, fun to just watch, the Senate try and keep up with technology, and then people not realize the things they're saying everybody can hear. So that's been fun. But in terms of things that are being worked on, we have a list of legislative priorities. I'm going to be sending it out to all of you next week, but we've already started moving on some of those priorities. And one of the ones that moved this week, the Senate passed it unanimously. The House will hopefully pass it next week and send it to the governor, is a pushback of property taxes. Let me caveat this. The state needed to pass legislation to enable local governments to push this back. So while the state is pushing back the dates, it is up to your local government to push back the due dates of your property taxes. But if they choose to, you would have until August 31st of this year to pay your property taxes and get the discount that you would get for paying early. In addition, it would push back the remainder of your property taxes until December 31st of this year without any late fees or penalties. So this is what the legislature passed. This is what the House will hopefully, the Senate passed, the House will consider it next week and go to the governor. But it is going to be up to your county and local governments to authorize this. So I think this was a huge issue for all of you. We're driving the ball forward, but this will require follow-up from all of you with your county governments to make sure that they follow through on that. In addition, and I'm not going to go through all of our priorities, we are looking at rent issues for many of you. A lot of you, some of your landlords have given you a break, others have not. So we have legislation that we're going to be pushing shortly that not only the Supreme Court has already said that you cannot evict somebody, but we're also concerned on the end of, we don't want you to be assessed late fees. We don't want you to be in default of your loan. We don't want, when this is over, for your landlord to come back and say, by the way, because you couldn't pay the last 2 months, now you're in default and we're going to rework your lease and increase your rent or anything like that. So we have legislation that's going to move to that front. Secondly, we have legislation that will push back taxes, that will provide relief on tax remittance, that will provide for sales tax holidays. We are literally throwing everything at the wall in terms of trying to get all of you relief, in addition to getting some increased cash flow to all of you via that state loan that ran out in less than a week, but getting some additional cash flow for all of you. I think we recognize that P3 is great, but you're going to need cash flow when you're able to reopen to get product. And we're working on that at the state and federal level as well. Also, we have legislation that probably, I don't think it's been introduced yet. I reviewed it again yesterday, relating to business interruption insurance. John will vouch, this issue drives me batty, as I know it drives all of you batty in the fact that you have all gotten insurance, and if a massive fire rips through your town, God forbid, you would have business interruption insurance. But because of a clause that was inserted a few years ago, during all of this, the insurance companies have said, we don't have to pay you anything, we don't have to do anything to help you. And I think there's frustration on our part as we see so many other industries step up, health insurance companies that are providing coverage for COVID, even though it's not included in somebody's plan. Utilities pushing back payments, everybody kind of coming together and doing the right thing, and the recognition that the insurance companies haven't done that. They've really kind of said, there's nothing we can do, good luck to you. So we do have legislation on the state level that will require them to pay out to some extent business interruption insurance, while recognizing this is going to be a federal funding issue. So while we might have the state bringing it to the forefront, recognizing that they have to cover it, this will require kind of a combination between the state and the federal government as it relates to paying out anything from those insurance companies. So that's an item that we're working on right now as well. That's just a slight, very superficial surface idea of what we're working on. And like I said, I have one more legislative committee I need to run this list by, and upon their approval, it will be in the daily update probably next Tuesday. So keep an eye out for that. And if you think of things that we have not thought of that you want us to work on, please don't hesitate to reach out on that front as well. I'm going to spend 25 seconds on this last bullet on here, which is what happens when the orders are lifted. A lot of you are asking us that. And to be quite honest, in terms of, the federal government and state government, those conversations haven't occurred. There's discussions internally of developing a plan for the industry in and of ourselves. I think it's going to be a combination of both. When we see the light at the end of the tunnel, and God, I think we all want it to be sooner than later, we are going to provide you with everything you need to come back from this, what restrictions might be in place, what might not be in place. So I know all of you are asking us that, and just quite honestly, they're not there yet. Those conversations we're kind of like, tiptoeing around the edges, but we will be providing all of that information to you upon it being figured out as we see where this goes. As we said, we're watching other countries that have opened back up and then have had a resurgence of the virus. And those are all things that we're going to have to consider working around and getting through when it comes back to opening up for business at the end of this. Eric, next slide. I don't even know what's on the next slide. Okay, I'm going to turn it back over to John to go over some of our general resources, and then I will start working through questions. John? Uh-oh, did we lose John?
Thank you, Melissa. Sorry about that. Melissa will go through the questions while I'm speaking so that she can come back, and hopefully we can answer almost all of those. We'll do our best. Just want to cover a couple of quick things in more general nature. One is the HARP, the Hospitality Assistance Response of Pennsylvania. I know you know something about this because we talked about it last week and you see it in the daily updates, but we We had two relatively large benefactors come in, Tito's Handcrafted Vodka and Yingling, our friends here in Pennsylvania, to provide the seed money for the fund. We haven't opened it up for applications yet, and I'll explain why. About 5 or 6 of our colleagues in other states have set up similar funds and opened up applications, and within somewhere between an hour and 12 hours have closed applications because the money was gone. So we're trying to get at least a reasonable nest egg in there before we open the application process. We have a really good development committee of volunteers that are continuing to add to it, but that's what's happening there. In the meantime, and I know again you've seen this on our resources page, you might direct employees to the National Restaurant Association Educational Foundation Restaurant Employee Relief Fund, also known as the RERF. And we have links on all of on our COVID-19 page. They have raised well over $10 million, and they, in the first day that they had theirs open, they received 14,000 applications. I spoke with Rob Gifford, the president of the Educational Foundation, yesterday. They're working through their systems to ensure that they can reopen them and begin to accept applications again and get through them. At the same time, we spoke of a way that the states might be able to help to process some of their applicants as well. So hopefully folks that need help will get it. If you haven't looked at our Relief for Employees link on our website, you should, or direct your employees to. There's a huge amount of resources that are available. Obviously, when people are struggling out of work and desperate, there's never enough, but there's at least a lot of places for them to go to try to find help. Also highlighted here is the temporary transitional employment opportunities, which also is on our website. There are jobs that we have connected with, and there's also some jobs on our job board. Obviously, there's a lot of places doing business, so they're trying to hire people. So there are some jobs open for those of your employees who may, for whatever reason, not be applicable for unemployment. We spoke with someone this morning that fell into that category. And then lastly, and then I have one other thing I wanted to mention, two other things before we get back to Melissa. The carryoutpa.com, many of you, it's about 50% in the state now, have adopted to some sort of carryout or delivery service or curbside pickup, even if they weren't doing it before. That's really good for the people that are struggling now to get food. And of course, it at least keeps the doors open in the restaurants. And the people we've talked to have seen a steady growth of their takeout sales since this has been implemented about a month ago now. Not certainly enough to cover all the costs, but at least it's something, and it also helps people that need food. So that's been a really nice effort on the part of the industry. I also wanted to mention that we've had a number of restaurants contact us who have had employees who have either tested positive for COVID-19 or had been around someone who tested positive, a close family member. And so consequently, in our update yesterday, we included a letter from one of these restaurants to the team, the employees, to let them know about it, and also that kind of highlights the things that you need to do as a restaurant if this happens. This seems like it's a remote possibility. It's less and less remote as days move on. I got a notice this morning that a grocery store not too far from us here had the same thing happen. They had to close the store, re-sanitize the store, advise all the employees, and I think it's going to be more and more that this happens. So please take a look at that link on the website and be prepared if you have this happen in your organization. Then lastly, before we get back to Melissa, I wanted to point out that last Friday, we announced in the update that the PRLA has suspended the billing of dues and suspended our ACH. So we're no longer charging our members dues until we get through this crisis. It's just, you need your cash flow too much. You need every dime you can get. And also as a result of that, like many of you, we've also trimmed the PRLA team not insignificantly. So a lot of our folks now are on furlough, including Melissa's very capable right-hand person. And so we've stepped up to help with the administrative things in the government affairs area, and I'm kind of acting as Melissa's right-hand man, but I promise you I'm nowhere near as good at it as Mary was. So we'll do everything we can to continue to be very responsive to your questions and needs. You can contact either one of us at any time, and we'll do everything we can to get back to you in hours, not days, and try to resolve the issues that you have. Each day when the update goes out, we have a flurry of questions and concerns we try to deal with. We'll continue to do that, but I just wanted you to be aware of that and be aware that the team that's in place has redistributed duties, and they're all working hard to make sure that we take good care of you. And with that, I'll turn it back to Melissa, who will probably want to go through some of those questions. Melissa?
Thanks, John. I'm going to go through one by one. So I want to reiterate again, there's a question about the $600. This is directly from our state unemployment office. Once implemented, this is the $600. Payments will be retroactive to the week ending April 4th. It is anticipated that this benefit will be paid on a bi-weekly basis the week after you file for and receive your regular payment. This benefit is taxable and therefore will be subject to 10% federal withholding tax if you elected to have taxes withheld from your regular unemployment compensation benefits. And your employees can change that designation via their unemployment compensation. But if they did say they wanted the taxes withheld, those taxes will also be withheld from the $600. I have a question. Do we know why folks have gotten their applications through the development corporations denied? We haven't heard any general specifics. Overall, they ran out of money. They ran out of money within a week. In 6 days, for the $61 million they had $85 million in applications. So I think some of them were just denied because they ran out of money. But outside of that, I would urge you to reach out to your development corporation and see if they can provide more information, because those ran for each county's development corps. So we can't necessarily speak to how each individual county handled their applications. I think, Bhavesh, I covered your question. How is unemployment compensation going to affect the employer? We will be, currently we do have relief of charges. So employers will not see any increase in terms of their charges that is assessed to them because of unemployment compensation. But I'll speak to this as a legislative priority. The relief of charges is only during the crisis. And I think we all recognize that when this is over, when this state of emergency is lifted, none of you are going to be back. Some of you might, God bless you, will be back to 100% of your previous employee count. So we have legislation, it's another priority, that will push back the relief of charges for employers to a full year, to allow you more time to bring your employees back while recognizing that this is not going to be a light switch that is flipped when this is over. You're going to need more time, even outside of the parameters of the CARES Act and the state of emergency, to overcome that. So that is state legislation we're working on right now. In order to get forgiveness for the PPP, if we hire our employees back, but they aren't making what they used to because of lack of business in regards to their tips, do we need to compensate them for those tips to keep their salary where it was through their hourly wages? If you want loan forgiveness, yes. You have to keep them within, and this is the loan forgiveness piece is something we're still waiting for more information from Treasury about, but you do need to keep them in the realm of what they were making before. And you are allowed to use the P3 for your tipped employees inclusive of their tips. So you do need, for relief of the charges for the PPP, to have it forgiven, you do need to get them within striking distance of what they were making previously. Is the 75% staff salary P3 forgiveness requirement need to be met by June 30th or as an average over the 8 weeks? And this is the frustration right now. We would like Treasury to allow you to pick your 8 weeks. Therefore, we would like you to be able to pick May 5th to June 30th because that's the 8 weeks that you picked. But it has to be, you're basically going to be submitting 8 weeks to your bank for the forgiveness. So it's not going to be an average over the entire time. It's going to be the 8 weeks that you pick. what we would like, and what we think if we need legislation, we'll do it. Like I said, is for that 8 weeks to be of your choosing, not your loan origination date. Or being able to talk to your bank to say, I would like you to hold my loan and make my loan origination date May 5th. But it can't be spread out over 12 weeks. You have to pick 8 weeks that you will submit to your bank to count for the forgiveness. I spoke to property taxes. If we do not have everyone back on staff by June 30th, but have 30% back, will the 30% spent on payroll be for 100% forgiven? Yes, but you will, if you have to use at least 7, that's the guiding principle. 75% has to be used on payroll. If you only are using 30% on payroll, that will be forgiven, but the remainder will convert to a loan. So it will no longer be subject to being forgiven. It will convert to a loan, which they've now since said will be a 1% interest rate that has to be paid back in 2 years. The law said 10 years, Treasury came back with 2. And I'll reiterate that again. The P3 parameters that I'm talking about are for loan forgiveness. You don't need to have 100% of it be forgiven. It just converts to a loan that needs to be paid back. So it's entirely up to you to figure out if you want to use it all to be forgiven, if you want to use some of it and keep some because it's going to help with cash flow, that's an entire business decision that's going to be up to you. This is 501c6 in the P3. The Treasury and the SBA has not changed any of the requirements relating to the P3 and 501c6s. It continues to only be 501c3s, 501c19s, and native tribal organizations are the only nonprofits that are eligible for the P3 at this time. It has not changed. We have not gotten any hint that will change. That's going to require, as I said, kind of the COVID-4 package to try and broaden that into the 501c6s. Any buzz about the essential lodging concerns? Yeah, I did touch upon that a little while ago. We are keeping an eye on it. Currently, hotels are still allowed to operate. I don't think the 2-week opening of trout season is helping because I have gotten from some of our more rural properties are basically saying people are coming out, to go fishing, and can I deny them access? And so this is a conversation that I hope we do not have to have. I hope the state continues to recognize the vital role that hotels have, but we are keeping an eye on that and are in close conversation with the administration. I think the crackdown on the short-term rentals, which was really the overarching problem in Pennsylvania as it pertains, especially in the Poconos and in Philadelphia, the Poconos New Yorkers were just coming down and renting short-term rental properties. If you look at the COVID cases in Monroe County, it's not even truly reflective of how many cases they have, because if they're from New York, they don't count in our count, even if they are sick in our state. So that, I think, is going to really lay the groundwork to protect our hotels moving forward, to continue to operate as essential businesses for guests at all times. But we are constantly having conversations on that front. Not sure if I was clear on employees getting the extra $600 and now getting more by not working. Is that a possibility? It's a possibility. I guess it depends on how much they were making week to week and how much the $600 helps them. So if they were making, if it was $500, then they get another $600 a week. They could potentially be making a little bit more on unemployment than they were working. That is a concern. But I will say that, I mean, the whole goal of it, and we really have to look at it in terms of how the government looked at it, was they recognized our employees needed help. And we all went to the government when this started and said, our employees need help. And they did that. They have provided that. Obviously, we need to look at that and see how that's going to look moving forward. But we also need to recognize that, we're suffering, but our employees would be suffering so much more without this extra income while they are unemployed. So we are going to look at that, but we also need to recognize the fine line that until we can bring them back, our employees need to survive, and this is helping them do so. So we really want to stay focused on that front. Another question, I got this last week. There is county room tax. We have not heard anything relating to counties and delaying room tax. That's a conversation to have with your county government. It is not where PRLA is working at the state level on all of this, so I cannot speak to anything your county governments decide to do. So I urge you, hotels and/or destination marketing organizations, those are county conversations that we have not been privy to as of yet. Has there been any thoughts on the challenges the industry will face regarding onboarding and where the state of talent will be when operations can resume? John, I don't know if you want to speak to this. I know that we're providing a lot of training to employees, and I urge you, if you haven't looked on the National Restaurant Association's Ed Foundation and AHLA to provide continued training. But there will be, I mean, there's going to be issues in terms of getting people back to work, and there's going to be issues in terms of, I mean, gosh, before this we were desperate for employees, and now I think it's going to be, you know, the reverse. I think that we're going to have more people who want to work, I would hope, than we're able to, but that's definitely a conversation we need to have. John, I don't know if you want to speak to that question.
Yeah, Melissa, I think you handled it well. There's been a lot of conversation now about ramping back up. So we're already, obviously, we need to be talking about how we ramp back up. There was a question, I think, in there somewhere. Do we expect that when the ramp up comes back up, that there will be mandates about 50% occupancy in restaurants, social distancing, things like that? Our goal is always to try to figure out a way to self-regulate and not have mandates. So there's a lot of discussions going on both in Pennsylvania, other states, and at the National Restaurant Association about what that looks like coming back up. So that's one aspect of it, is how do we get back open again as soon as possible without causing potential danger to the citizenry. And then secondly, on the talent, I agree with Melissa 100%, and I'm sorry to say that, well, number one, there's not only the NRA, National Restaurant Association, but AHLA has some great free training options available. If you look at, I think we have links from our COVID-19 page too. So some great at-home things people can do to develop their skills and keep busy. Back to the talent, I'm afraid that we're going to not have a problem with talent because we're going to have restaurants operating at diminished capacity, at least initially, and we're going to have some restaurants that we've already heard about that are not going to reopen. So that's kind of a really bad news and good news story, is that we went into this with an extreme talent shortage in restaurants and hotels, and I think the one outcome of this is there's going to be a lot more talent available to us coming out of it, unfortunately. Back to you, Melissa.
Okay, let's keep on working through some of these. If I run my business out of my home but have been impacted by the shutdown, can I still file for P3? Self-employed are allowed to file for P3. So yes, the answer to that is yes, as far as Treasury has informed us. So you think before the end of June, we will either know more about opening or there will be more funds to keep going so employees don't have to go back on unemployment? The day I can speak on the thoughts of Congress will be the day that that will actually probably be a very scary day if I can actually understand what Congress is going to do. But I will tell you this, Congress passed the CARES Act, I think with the understanding that they really did think that by mid-April, beginning of May, we'd be out of this, that we would see the light at the end of the tunnel. Their goal is for nobody to go back on unemployment. And I believe their future goal will be to ensure that nobody goes back on unemployment. So I would hazard a guess that future legislation will extend either the deadline or provide more funding to achieve that goal. Nobody wins if you take your employees off of unemployment and have to put them back on it. So I would hazard a guess, a very well-formed guess, that something will be done to ensure that your employees do not go back on unemployment. Is any direction forthcoming about using CDBG funds for tourism promotion, or CDBG funds? We have not gotten any direction in terms of some of those funds, where they're going and what's going to happen with them. So we're still waiting on all of that guidance from Treasury. If I had an employee furloughed before COVID-19, will they receive the $600? The $600 is, I believe it is directly related to COVID-19, but we would need to check on that. But $600 to individuals receiving unemployment benefits beginning March 29th through July 31st. So we would need some more information as it relates to that. So I don't want to speak to that question because I don't 100% know if an employee is on unemployment not related to COVID, if they would be eligible for the funds relating to COVID. I knew I was going to get that. The employee retention tax credit, somebody asked about the 2 credits that are available. The employee retention tax credit is one of them, and the other is a deferment of Social Security taxes until the end of the year. So those are the 2 items that we believe if you have applied for the EIDL that you can take advantage of. If an employee quit prior to COVID and we decline the initial unemployment claim, again, prior to COVID, could they go around and reapply and be automatically approved right now and take advantage? This is the rub. I mean, you essentially everything relating to unemployment in the CARES package and the Families First, which is the paid sick leave, is if you pretty much say the word COVID, you're going to get benefits. So yes, I mean, could they do it and could you disapprove it? You could go down that path. When you get the letter saying that they applied again, you could say, no, this had nothing related to COVID. That's absolutely your decision as a business owner to appeal their application for unemployment because it was unrelated. But that's a business decision you need to make. Can you clarify what you were saying about the P3 loan turning from a 10-year loan to a 2-year loan? This came from the Treasury last week. So when we did our initial, this is what's in the CARES package presentation, the law said anything you don't use in the P3 will maximum 4% loan to be paid over 10 years. But it gave Treasury the ability to develop regulations that are different. I think we all assumed it was going to be unchanged. But last week, the Treasury actually came back with a 2-year loan at 0.5% interest. The banks pushed back. And then their latest iteration is a 2-year loan at 1% interest. So while the legislation said 10, Treasury has said that the P3 loans are going to be at 1% over 2 years. So that is the latest numbers from the Treasury. So the 10 is no longer floating out there as a possibility unless Treasury has a change of heart. With that being said, on your EIDL loans, that is going to be a 30-year loan. So that's another option in terms of more of a long-term loan that is going to be at that 3.75%, but that does give you a longer period to pay back the loan. Thank you, Tom Neely, for that message, and I'll give it, Hope, you want to give it another minute to see if we get any more questions?
Yep, sure. We've got about 2 more minutes until noon because we will cut off at noon so that Melissa can get back at it. To everybody on the call, we have recorded this webinar and we will be transcribing the questions and answers later on this week and be working to put that up onto our FAQs so that you can go and reference that. But you will be getting a copy of this also so that you can go back and listen to this or forward to whomever may have not been able to get onto the call. It seems like we're all done. So thank you again for everybody getting on and for sending in your questions. Thank you, John. Thank you, Melissa. And I hope everybody has a safe and wonderful day. Bye-bye.
Stay safe, everyone.